So we're just about at the end of the year, which means tax season is coming. And there are a few things you should probably do to prepare. So today we're going to talk about a few things that you should be doing to prepare for tax season. And stick around because this week's tax tea, we're going to be talking about a business owner who was probably one of the America's dumbest criminals, which is why he got caught by the IRS. And we're going to be talking about that on today's episode. So stay tuned. So without further ado, let me welcome on my guest, Lola Turner. Well, I guess you're not a guest.
No,
maybe that wasn't
far
right.
from it. I am a co-host. Like, dude.
Well, welcome back to the show.
Thank you. We're 27 episodes into the show. Like by now, I think you should know that I'm a regular. I think I've been present for every episode, Terrell. So I don't even know if a guest counts.
I think part of it is that I host so many different shows. So, I mean, I'm used to saying that. Like,
that's fair.
I think I did a couple interviews today with some other people, and I'm just used to saying it. Like, hey, welcome back, my guests. So, but welcome back to the audience. Thank you guys so much for watching the Stuff Your Accountant Isn't Telling You show, because there are a lot of things that your accountant is not telling you. And you're going to hear a little bit about it in today's tax tea, where we talk about, I'm telling you, it was like one of the it was like reading a story of like one of the America's dumbest criminals type of situation. So we're going to talk about that. But what we really want to talk to first is tax season is coming up. It's like that scene in, what, Game of Thrones, where everybody keeps talking about winter is coming. It's like, tax season is coming.
I feel like we should like whisper, and the tax season is coming. Oh, that's actually a good one. We could post something like a like a GIF or something. Tax season is coming. Yeah, it's very appropriate considering the deadline is in April. But we digress.
Yes. I mean, and I think, the reason why it's become even more taxing is because I think tax season has been probably more strenuous and stressful than ever before, because the last 2 years have been pretty brutal on trying to get taxes done. I think because of, the IRS, they've been behind on deadlines. I think trying to get answers, that hasn't been going well. And I think with all the COVID measures and stuff, and that just delayed things. And it's just been, and I will say, even before COVID, the IRS wasn't like the most pleasant, like they weren't having grade A customer service before COVID. So it just got worse. And I think it feels like as rules started changing kind of at the last minute, people didn't know whether should be filing for this, whether I qualify for this or not. And tax season has just been chaos, because even as I talk to other accounting firm owners, like several of them have said, you know what, I'm trying to get out of this. And I'm just like, man, tax season has been that bad.
Yeah, I think also the other part with the PPP loans and some of the funding that came during COVID, I think there wasn't a very good communication across the board on how to handle some things. And I think there was some confusion. And so I think just filing taxes was just probably not the best and most fun process for people. And I think honestly, the bigger thing that probably contributed to it or continues to contribute to it is the lack of preparation, right? Because a lot of times people are scrambling at the end of the not even at the end of the year, forget that. You're at least proactive if you're getting your financials by the end of the year. Some people are scrambling February, March, to then put their financials together, to then go meet their tax accountant who they've only talked to, last year in April, the last time they did their taxes. And now, you haven't been prepared. your tax accountant doesn't really have, visibility on what you owe is going to look like. And it just becomes a very stressful conversation, not only for, you as a business owner, but also for your tax accountant. So I can completely understand why tax accountants are like, yeah, I don't want to do this anymore, because I feel like more times than none, and I've had this talking to my friends. I mean, we don't do taxes, but every now and then during tax season, I'll have at least 4 or 5 of my friends reach out to me, at the beginning of the year or like mid-May or mid-March, and start asking questions about, hey, I bought a property. How do I handle this? Or, hey, I bought this business. How do I do this? And it's just like, it pays to get, it's helpful when you're prepared ahead of time, because it just avoids all the stress that comes with trying to rush to meet a deadline that you honestly knew was coming from the get-go. So
Yeah.
I think definitely is interesting to navigate that.
And I'll say, I mean, in some defense of some people, I do think sometimes people don't realize what actually creates a tax event. And I don't think that accountants do a good job of explaining what that is. And to be honest with you, I don't think the IRS does a good job of explaining like what can trigger a tax event, because some people end up getting surprised like, well, I didn't know this had anything to do with taxes, or like I thought I just got paid, and or I thought, this situation happened and I didn't, like, for example, one of the things that people were getting a little surprised about is, when the Biden administration talked about doing debt relief. And then some people
Mhm.
saw that, hey, in some places that debt that's being relieved could trigger that you owe taxes on it. And people are like, where did this rule come from? And it's like, it's always been a rule.
I mean, because
Like
it's
canceled
considered
debt is
income.
considered
So
income.
yeah. Yeah, exactly. So I think honestly it's a lack of understanding. But to be honest, I mean, in all fairness to individuals or business owners, some accountants don't really understand taxes either, and like what's taxable, right? So I think that's why we emphasize so much on the importance of knowing the type of accountant that you need, because not every accountant is specialized in doing taxes. Like we do not do taxes. We've made that very, very clear. And that's not our specialty. But it's important for, I think, business owners to really find that person that's going to educate you. And more importantly, like we'll find out during the tax tea, that's going to tell you if you're doing the wrong thing when it comes to how you're handling
Yeah.
your taxes.
Yeah. Because I mean, I do think that for a lot of people, and I saw this today, well, I'm starting to see it more and more, is more people are advertising like, hey, we can support your tax returns. And one of the questions that a lot of people just aren't asking is, what makes this person qualified to do that? I mean, it
Right.
was kind of, I think of it like this, like, you know, for people who normally, let's say if you normally get a flu shot, if somebody just start advertising, hey, we can help you get your flu shot, like we can give you your flu shot, you would probably want to know, is this person qualified in doing this? Like, what is their criteria? Like, you wouldn't just go to some random person to just let them give you a flu shot if that person didn't have any credibility. And I think when it comes down to taxes, people feel either so uninformed or overwhelmed or scared that they're willing to just trust anybody who says, oh yeah, I can do your taxes. Because I commented on a post on Facebook of a lady that does some coach. She actually trains people on how to do tax returns, like, so when they start their business. And I'm like, there are so many people that are doing tax returns probably because they saw someone at H&R Block do it once and they figured, well, I can do that too. And I'm like, that's like saying that, hey, I'm taking my car to get fixed by somebody. They watched a mechanic do it once before. Now they open their own auto body shop to start doing it. I'm like, I'm not taking my car to that person.
Yeah, and I think honestly, the reason for that lack of appreciation, I think, is twofold. I think one, it's just not being properly educated on the complexity of the tax code, or some people just downplay it, or people just don't understand how taxes work. I'm talking about being on the business owner side. So it's almost like easy for you to just give it over to someone else because you're like, I just don't want to deal with this. And then I think the second reason is also, I don't think people understand the magnitude of when you have situations where, like, if you make a mistake, the level of accountability that comes with, making that mistake. Like, we saw that with recently with the situation with the celebrities who got convicted. Like, the accountant got 3 years for the tax fraud, and they got 12 and 7 years respectively. So for me, it's like the level of accountability that comes with making mistakes. Like, I don't think a lot of people realize that the IRS is very, very strict when it comes to those things. And they just think, hey, my income is, I don't make enough money to be caught. But one of the things that we're finding with the tax tea segment we just started is there's a lot of business owners or a lot of people who are getting caught who make less than, who make six figures, who make seven figures. So you're definitely not exempt from that. So you want to make sure that you are doing things correctly and that you're paying, or finding the right person that can manage that for your business.
Absolutely, absolutely. So, as we've been talking about, getting ready for tax season, what can you do to prepare for tax season? So, the first thing that I would say is you want to make sure that you're reviewing your financials. Like, we're filming this in November. This will probably come out in December, some time frame. So you do want to actually look and see how much money or how much profit did you actually generate so far. Like, it surprises me how many people get to the end of the year and they have no idea how their business performed. And I'm just like, okay, all right, your taxes are going to be based on the amount of income that you had. Now, if you're a business owner, that's going to be whatever you paid yourself via wages, and then also whatever the profit is in the business. And if you have no visibility to that, I would say is like you're missing step one.
Yeah, no, I agree. I think that's the most that's the most important step. Like, you can't understand what you're gonna be owing unless you know what you actually made, right? So I think the first thing is avoid the surprises and actually have that conversation with your accountant. If you're doing your own bookkeeping or your own accounting, like, you need to understand, hey, how much profit did I have? And I think part of that process that's going to be very important is actually understanding from an IRS standpoint what qualifies as being excluded or counted as an expense versus what doesn't qualify. So when you're looking at your income statement or you're looking at your financials, you need to make sure, hey, would the IRS qualify and count this as a business expense? Should I be excluding this when I report, my profit and loss or how much money my business made? Or should I be including this? So I think that's like the baseline before you do that. Um, and then the second thing I think is just like, once you do get that, Terrell, I would say, like, setting the money aside to pay for that. I think a lot of times people forget that they're going to have to pay this money back. What are some of the challenges you've seen with that?
Well, I would say before setting that money aside, I mean, I think is really have a conversation with who's going to be your tax preparer. And one is make sure you vet them. Make sure they have the credentials, they have the qualifications. And I think as you're having that conversation with them, you can start understanding, like, hey, let me get an idea on how much money do I need to set aside so that I can pay whatever liability I owe, or I can make my quarterly payment. Because what I think a lot of people don't really plan for is that the IR, although you may say, hey, we did our calculation, it says I owe X amount of dollars. Well, in some of that, the IRS expects you to have been making payments throughout the year, kind of on a quarterly basis. So you need to understand, like, hey, not only do I need to set aside how much I owe, but do I owe penalties because I've been underpaying throughout the year? So I think as you work with a quality good tax preparer, they can give you an idea on, hey, here's how much you owe, and here's likely how much you may have in penalties because you either haven't paid enough throughout the year, And I think that's where you can start to get a better picture on how much money do I need to set aside, and not set this aside in an account that I can just go grab and spend. Like, you need to almost set it, kind of out of sight, out of mind, to where it is truly segregated from your operating account for how you run your business, because that money needs to be handed over to the IRS, or the penalties and the damages just could get worse.
No, that's a good point. I will say though, I mean, I get what you're saying on, making sure before you set the money aside that you do have, you find the right person to work with. But I think honestly, that's not always the way that it works. So from my perspective, I would say I think it's better to, because a lot of people, for example, now, if you get to the end of the year and you still don't have an accountant, like we're in November, and you haven't even figured out who's going to do your taxes for you. For me, I would say it is probably better for you to make a guesstimate and put that money in an account somewhere than just think that you have excess money to be able to go do something else in the business. And then you can work on actually finding yourself the right person. I don't think it always works where it's you can find the right person to work with before that. So my advice is always just plan ahead. It might not be the exact amount, but I would always set the money aside. And then, if you haven't found the right person to work on that, but I think it always makes sense to prepare ahead, than have to kind of find the accountant and then get this large tax bill and then be surprised of, oh my gosh, like I didn't plan for this at all.
But I honestly think, I mean, I think this is where we may have a difference of perspective on it. Because I honestly think that the best time to find an account, or the easier time to find an accountant, is before tax season actually starts. Because I
I
think
agree.
with what a lot of people run into is they wait until tax season starts, and then that person's already busy, and they start going through your numbers. And then if you don't agree with the result, you start trying to ask questions. And it's like, that person already has 100+ other clients that they're working on. They don't really have the time of day to give you to really go back and forth on, what your questions are, whether
Yeah. And I
they're
mean,
legitimate questions or not.
yeah, I mean, I agree with what you're saying, but ideally in a like in this scenario, if someone is listening and they don't have an tax accountant today, like I fully agree. I think you should get a tax accountant before you need them. I think that makes sense. I think that's a prudent decision. But the reality is, if I'm a business owner and I don't have a tax accountant, like what's the first thing I should be doing? I agree. Yeah, you should be working to get a tax accountant today before, January 1st hits. But at the same time, you need to make sure that you put your business in a position where that huge tax bill doesn't negatively impact you. So while I hear what you're saying, I don't agree that it necessarily, like realistically as a business owner, like I don't it doesn't always work that way. Like usually people do one before the other. And so my thing is just if you need to make an estimate and put the money aside before you find yourself a tax accountant, then do it.
So how would you approach making that estimate? Because most people don't have an idea on how taxes are calculated.
I mean, so this is my thing, right? I would say this is my thing. I would say for most cases, like I would look and see. For example, if I take let's just take a restaurant, I don't know, business owner or something. I mean, I think there's research that you can do. It's not probably going to be the best, but my biggest thing is like you need to put something aside. It might be the wrong thing. Like for example, depending on whether you are an LLC or you are a corporation or whatever, depending on how the tax treatment works. If you are an LLC, like hey, when you look and see how the money's coming in, it's going to be a component of hey, what you're actually making on the personal side, if you have any other personal income in addition to your business, like all of those. And if you just assume, hey, what was my tax bracket? How much did I pay in taxes last year when I did this? Use that as a baseline, as a percentage baseline, and then put that money aside based on that. So it's not perfect, but it's at least a guide. And so for me, I'm like, that's better than having nothing in the bank set aside for this. And it might not be the perfect dollar amount, but at least it's something. So I would base it off of what you paid in taxes the prior year.
So you're saying that you would recommend that they take the amount of taxes that they paid the prior year,
Percentage, like
and
their
they
tax
say,
bracket.
their tax bracket. All right. I have a feeling that this is going to lead into me creating some type of tool for people to use because it's
I mean, I think
because
it's a great
I
guide because I think you are assuming.
I understand your perspective. And I will say is our firm, we don't specialize in doing tax support, but I mean, I as a CPA, I've done several tax returns and built out tax calculators for clients and work with tax professionals. And one of the things that I do recognize is that building out like helping them come up with their estimated taxes that they should pay. Like there was one client where they had a horrible experience with a prior tax accountant and they were just like, this experience was so bad. And I'm just like, all right. So I met with them. I built out a calculator. It was a simple calculator I built in Google Sheets. And I'm like, here, plug your numbers into this calculator. Now, when we got to the end of the year, I think we were off by like 6%. So they owed maybe less than $500. But they were like, this is like your calculator got us closer than the firm we have been using for years. Because every time we get to tax season, it would be a surprise. And they were like, your calculator was so much better. So I feel like what you're explaining, I think in theory, it sounds good. But I think having built calculators, and I'm just like, I understand why business owners often don't do it because, I think, for those that don't understand, like we have a graduated tax system. So let's say if you fall in the 25% tax bracket, not all of your income is taxed at 25%. It's a portion of your income is taxed at the lowest tax bracket. The next portion is at the next tax bracket, and it kind of graduates all the way up. And I would say for the average person, they don't know that, and they may not necessarily know how to do that. So it sounds like your suggestion is probably going to turn into me creating a tool to put out there to say, hey, here's a tool on our website you can use as this will not give you your exact answer. This will give you a round enough estimate if you put in your numbers so you kind of get a general idea on like, hey, here's how much I probably should think about setting aside.
Yeah, and honestly, like the whole purpose of the show is stuff your accountant isn't telling you. Like that's the title of the show. So the point that you're making about like finding the accountant is going off of the assumption that you find someone that's actually going to be proactive enough to tell you, hey, Lola, based on what we're seeing, this is what you might owe. We've seen people that we've worked with, the business owners that we've worked with, we've seen situations where their accountant has been zero engaged with them throughout the entire year, even though they've had them since the beginning of the year. So for me, I'm like, as a business owner, you cannot just sit and wait for your accountant to be like, hey, this is what we need to do, or this is how much you're owing. Like, no, you need to be proactive. And you know what? I agree. I think that tax estimate calculator is a perfect tool for business owners to use to say, hey, you know what, ballpark, how is this smelling? Does it smell right? Because there are going to be accountants out there where they only see you on January 25th when you bring your tax, your P&L through. They don't even review it. Some people, they just say, they just plug in the numbers. They don't ask the tough questions they need to ask about, hey, these numbers don't make sense. So we can't just count on the fact that the accountant is going to be proactive. I think that business owners need to have a tool that they can use to kind of get a good view as well. That's my point.
I mean, I would agree with that. I mean, I wouldn't advise any business owner to go find somebody and let them do it. I think when you find someone, I think that's part of your validation process of, let's say, if you're looking now in, let's say, December, before the end of the year, like, hey, I want to get an idea on how much I should set aside. Can you actually just run it through a calculator, or can you help give me some guidance on how much to set aside? I think if the person says, hey, I don't have time to do that, or the person says, well, I need to actually do your tax return to give you that answer, that might be a sign that's not a good person for you to work with. Move on to the next person.
I think we need a checklist that says interview questions to ask your tax accountant, potential tax accountant. Like we need a free one that's just out there, because I don't think, some entrepreneurs don't know, like, what questions should they be asking? How do they know if they're working? Just like the checklist we created for accountants. Like, how do you know if you're working with a crappy accountant or not? So I think that will be helpful, and we can actually add that in the show notes once we create it, just to give people that guidance. Because to be honest, I think we're giving, I'm an accountant myself, but I think we're giving some of these tax accountants a lot more credit than they should get. But
yeah, I mean, I would say I'm not giving anybody any credit. I'm more so I'm more interested in giving the business owner, hey, here's what I think you should do, and
Mhm.
here's how I think you should go about it. Like, I think you should start looking for your accountant now. And hey, here are some of the questions you should be asking to
Mhm.
find out whether this is a good one to go with. Because where I think a lot of people fall into the issue of is they wait until tax season starts to then try to go find somebody who does taxes. And at that
Right.
point, it's just like you're probably not going to get the best, because the best people are probably already spoken for. I mean, it's almost like
That's
I think
fair.
about, like, as a kid, when you were growing up, and I don't know if this was the same way for you, but in the neighborhoods I grew up in, we played sports a lot. And usually the best kids, or probably the kid who had the advantage. Like, if we were playing basketball, the tallest kid probably got picked first, or the kid
Mhm.
who had the best skills. The person who was left last usually wasn't like, oh my gosh, I am so thankful that I got you on my team. Like, that's not usually who gets picked last. I mean, so I think for a lot
So
of people, when it comes down to,
are you saying that the accountants that are available during tax season are the ones that are not good? Is that what you're saying? The tax
what I'm saying
accountants?
is, the ones that you find at the last minute are probably not going to be the best option. That's
Because
what I'm
honestly,
saying.
because honestly, a really good quality tax accountant should probably not be taking, my view, should probably not have the capacity to take on new clients, because they already have, like, they're interested not in quantity, but it's more so quality over quantity, or they're very specific about the type of clients they take on. They're not just saying everybody come to me and I'm just going to file this. So, I do agree. I think that's definitely a point to consider.
Yeah, I mean, because I think as a business owner now, if you were just an individual, you're getting a personal tax return, it's usually pretty straightforward. I mean, if you
Mhm.
waited till the last minute, I mean, there isn't going to be a ton of complexity if you're just an individual taxpayer. But if you're
Right.
a business, there are some specific things going on with your business to where this isn't just I guess you would say, just a cut and dry process. If you're a business owner, there's some questions to ask, like, what, do you have employees? So we want to understand, hey, what about, payroll taxes? What about, potential tax credits you may be eligible for? What about, your estimated tax payments? Have you paid those? What's going on? Like, what states do you operate your business in? What states are your employees in, and stuff like that? Like, there's a lot more complexity to a business tax return than there is to a personal tax return, which is why I would say, for a person, if you need help with your business tax return and you're waiting to the last minute, what I have definitely seen is you're not going to get the level of attention, or the accountant may do the tax return, but they don't really have the time to explain to you, hey, here's what we
Mhm.
did, or here's why we did it this way. Because at the end of the day, what we know is that the IRS ultimately holds you responsible for your tax return. So you do want to work with someone who could at least give you some context to help you understand, like, hey, not only here's your tax return and we filed it, but hey, here's your tax return. Here are some of the key things that we did in it, so that if anyone at the IRS ever sent you a letter, or if you ever had any questions, that you can actually kind of understand or conceptually explain what happened in your return, because at the end of the day, the IRS holds you responsible for it, not necessarily your tax accountant.
Yeah, and I think the other advantage of doing it that way also is, the accountants also having the time to tell you, hey, if you had managed these things differently, like this could have been the outcome. And it might not necessarily be an exact figure, but I think what that does is it helps put you in a better position for 2023 or for the new tax year, because now hey, I could have done this, or I could have, adjusted my business strategy XYZ to help maximize some of the incentives that may have existed, or, to help reduce the liabilities, whatever that is, right? So I think it's definitely not just like you mentioned, which I think is important. It's not just the aspect of, hey, making sure that you are that you know what exactly was done in your tax return, but I think it also helps prepare you for the next year, so you know what you need to do differently, and if you need to change your strategy.
Yep. I mean, and I think also something that people don't realize is that, a lot of businesses, what they end up doing is filing an extension. Like if you find an accountant and let's say it's probably after February, they're probably going to end up filing an extension. Like, especially if you're an S Corp or a partnership, it is required that you actually have your business, your partnership, and S Corp tax return is actually due by, let me look at the dates because I want to get the date exactly right. So it's due by March the 15th. Now, your personal tax return and any payments, they are normally due this year, it'll be April the 18th. So your partnership or your S Corp tax return is actually due a month before the big tax deadline. And the thing is, even if you file an extension to say, hey, we're not going to have our tax return done by April 18th, we're going to file an extension, which will give you until October 16th to do your tax return. But the IRS still says if you owe money, even though you filed an extension, you need to pay that money by April the 18th. And you may say, well, I don't have my tax return done yet. So how do I know how much I owe? And the IRS is like, okay, you can wait till October 16th, but we're going to be adding penalties on and interest until this money is paid, which is why I think, like I said, for so many people, a great preparation step is to get an idea of what might my tax liability look like. Like there was a client of ours that, we were working with and he wasn't able to get his tax return done by the April timeframe. So I said, hey, based on how much money you made, and I looked at some of the other things that you had going on, you also sold one of your businesses. Hey, I ran a calculation and said, hey, here's about how much you are going to owe. It is probably best for you to go ahead and write a check today to the IRS. That way your tax liability won't be so grossly underfunded that they add on a bunch of penalties because you're going to wait until October to actually file the final return.
Yeah, no, that's good advice. I think most people think that they can extend the deadline, but they don't think about the penalties that come with it. I want to talk about the other things that we recommend as business owners that you have prepared. I think the other point I wanted to talk about was just making sure you're collecting all your documents. I feel like we really touched on that really. I mean, having all your stuff together. I think in order for you to be able to review your financials, a part of that process and step should already be completed. But there's other things that you would need in preparing that. Like you need to do the 1099s. You need to have your W-2 for your employees. You need to have, if you have like any bank loans or mortgage interest, you have to have your 1098s for that. So like I think all of those things are important. Terrell, is there anything else that I'm missing in that step of just gathering all the documents?
Yeah, I mean, I would say, when it comes down to gathering your documents, a lot of people are confused on, well, do I need all my receipts and stuff like that? And I would say, as a rule of thumb, your receipts are needed in the event that you get audited. What you need is financial statements to do your tax return. So I know a lot of people wait and they just bring a box of receipts or whatever. And I'm like, okay, that's an old school way of doing it. Like people can take your box of receipts and then create your financial statements. What would probably be even better is just setting up some type of online accounting system, whether you use Zero or whether you use QuickBooks or whether you use FreshBooks, having some type of online system that can categorize your expenses so you can get a set of financial statements. So you get a balance sheet and an income statement, because that's what's going to be used to file your tax return. Now, a deadline that a lot of people tend to forget about is your 1099s. Now, what 1099s are is for anyone that you have hired for that, or that has provided a service for you, non-employee compensation, not vendors you've bought a physical product for. So anyone that's provided a service for you, that also includes the landlord that you rent your building or your office from. If you have paid them more than $600 in total for the year, then you are responsible for filing a Form 1099 with the IRS. And what that is that is you telling the IRS, hey, I, XYZ business, have paid this person X amount of dollars during the year of 2022. Now, for you to be able to file that, you're going to need that person's social security number or their federal ID or EIN number. So it is best for you to go ahead and run a report that shows what are my expenses by vendor for all of the people who provided a service, and let me start getting that information from them now. Because if you wait until January to start trying to collect their social security number, their EIN, and their address and all that stuff, you're not going to get it in time. And what ends up happening is people end up not filing their 1099s. And what the IRS says is that you as a business, if the IRS finds out that you have not been filing 1099s, there could be a penalty for every 1099 that you missed. And the penalty accrues on a daily basis. So I think a lot of business owners definitely need to focus on like, hey, let me make sure we are prepared to file our 1099s for all of the people who provided a service to us.
Yeah, and I think that's a really good point on the dates. Like I think those are important to know, because I think a lot of people don't know, like for 1099s, like who should I be sending a 1099 for? When do I send a 1099 to this person? So I think that's really good guidelines and deadlines. The other thing to be mindful of is, I think when people talk about 1099s, is they think about anybody that has done work for them. I will say, if the company is not an incorporation, and Terrell, just keep me honest here, if they're not if they are an LLC, you are required to issue a 1099 for them. But if they're not, they don't have to get a 1099. Is that correct?
It's really come down to like if they're a corporation or they meet some exemption, then they are not. So the easiest way to think about it is if you Google IRS form W-9, if you get every person that you provided a service, like if you've had a guest speaker, if you've had a person who cleans the office space, or if you've had, your landlord, or you've had a contractor come in and do like a photography session, whatever it is get them to fill out a form, IRS form W-9. Let them fill that out, sign it, and give it back to you. And on there, they'll have to check the box of what type of entity they have. And that'll help you understand whether or not, you need to file a 1099 for them.
Yeah, and I think another tip is there's a lot of good resources out there where you can do mass 1099 filings, where you can issue that stuff to, the people that you've worked with. So that's just something to be mindful of. You don't have to go through the paper and pen process for everything. So I think there's really good tools out there that business owners can use as well. Yeah. So I can include some of those in the show notes that we've used as reference.
And this one might be a little late for this year, but moving forward, one of the things that you can look at is, like, we recommend Gusto payroll for a lot of our clients, because if you're paying your contractors via Gusto, Gusto will automatically do the 1099s for you. For all the people that you pay via Gusto, that service is included with, your Gusto. So Gusto handles payroll for your internal employees, and they can handle doing direct deposits or issuing checks to contractors. And for the contractors, Gusto will handle that for you. So when you get to the end of the year, all the data is in the system. Gusto will go ahead and process that for you. So that's one less thing you have to worry about. So maybe that will be a good one to consider going into 2023.
Is that a trick? Do you have to do something as a business owner to trigger that, or does it automatically just process it when you get to 2023 and send them through, or do you have to like submit something in Gusto?
No, so for our clients that are in Gusto, what we did is the people that they pay via contractor, or the contractors that they pay, we set them up in Gusto as a contractor. And so they'll go in and say, hey, this contractor worked on XYZ. They key in how much that person should get paid. They process it. So at the end of the year, Gusto already knows the contractors. And actually, when we set them up, Gusto sent a W-9 to that person, and that person filled it out. So their W-9 is already on file. How much they got paid is already on file. So Gusto automatically knows we need to issue a 1099 for these people who are set up as contractors who have a W-9 on file.
That is actually going to be really helpful, because it definitely, like you said, one less thing for people to think about. You're already thinking about a lot. So I think that actually will be a great tip. And we are not being sponsored by Gusto, but hey, who knows? Maybe one day. And then we can actually get paid to say that. But no, it's a genuine recommendation because we think that's the best tool to use for that.
Yeah. And there are some other tools out there, but I will say from just different people that I've talked to, like, we have some clients that use ADP. We have some clients that use Paycor, some that use Sure Payroll. But one of the feedbacks that we've heard from different clients is that Gusto's been probably one of the easier ones for them, because it's easy to run payroll, and also it's easy to pay your contractors, and that feature where those 1099s automatically get processed. And I will say, from the accounting standpoint, Gusto is a pretty good, easy one to do the accounting. So for us, when we're doing the bookkeeping, if someone's using Gusto, I will say it does make our job even easier, because the reporting actually is really good and really clear and simplified. So I will say I do recommend Gusto to people. It may not be the only one. I do recommend it. I will say we will include a link, because we do have a referral link with Gusto, which I will be honest, we'll put that in the notes. So like I said, if you wanted to check out the pricing for Gusto as a service, like, you can click that link.
There you go.
And it, because like I said, I think at the end of the day, you want to automate as much of some of this stuff as possible, which is why I think also, as you're, preparing for tax season, one of the things that you also need to prepare yourself for is, if you have not had a bookkeeper throughout the year and you go to a tax accountant, they're probably going to charge you extra, because they're going to have to do the bookkeeping for a whole year to create the financials. So you do want to prepare yourself for that, because a business tax return may be minimum $1,000, and then it may be more if that person also has to do the accounting for the entire year to be able to file your tax return.
And I will say, in addition to preparing for that financially, also prepare for the fact that it's going to take a lot of time. You're asking this person to do financials for you for the whole prior year in a matter of months. So the earlier you, like Terrell, the point you made earlier, like the earlier you start, the better. Ideally, if you need financials to be prepared, you should be finding and hiring that person to do that now to start, because you're bound to rush things if you don't do it soon, and if you don't do it early, because what you don't want is your accountant to rush things. You don't really have time to work through transactions. And then the other thing also that I found when we've worked with people where we're going and kind of doing a year to date view is people forget things. Like, people don't remember, like, oh, what did you spend this $7,000 on in March of 2023? Like 2022, people are like, I don't remember what that was. So there's some additional work that's needed to kind of find that. And so you may run the risk of not having accurate financials if you wait until that time period. But if you're in that position, I would say the earlier you start, the better for you.
Awesome. So the last thing I will say on this, and I'm gonna look at this because I want to make sure that I get these dates right, is there are a few key deadlines to keep in mind. So if you're making quarterly tax payments, January 16th of 2023, that's where your fourth quarter estimated tax payment is due by January 16th. January 31st, your 1099s. If you have any W-2s, meaning you have internal employees, you need to have those issued and they are due by January 31st. If you're a partnership or an S Corp, you have to file a tax return for that partnership or S Corp by March the 15th. And then if you're making any contributions to your retirement account, that needs to be in by April the 18th if it is going to count towards your 2022 tax year. And April 18th is also the day that your tax return is due. And let's say, even if you're filing an extension, the amount of taxes that you owe, that is due by April the 18th. Because if you miss that deadline, there could be penalties and there could be, interest attached to it. And if you do file for an extension, do it before April 18th. And if you do file an extension, your tax return will be due October the 16th.
Yeah, one thing to also add is you only pay penalties if you owe, right? So that's another thing,
Yes.
because I think that sometimes people are confused because they're like, okay, what if I get a refund back? Am I going to get, and I delay, and let's say I file up, by the October 16th deadline, am I going to still have to pay interest for that delay? No, you only pay interest on when you owe the IRS money. They charge interest, or they backdate it based on, from the April 18th or March 15th, whatever your date is, to October 16th. So that's just something to be mindful of there.
Yeah. And one of the things that I do say, I mean, I think all in all is, I think people don't understand like how big of an expense taxes are. I mean, if you think about, how much money you pay in taxes is probably the biggest expense that you pay, the entire year. I mean, even when you think about like the home that you live in, if you take your mortgage payment and you multiply it by 12, and then you also look at, okay, compare that to how much money you paid in federal, state, and local taxes, you will be very surprised to realize the amount of money that you pay in taxes every year. It is much bigger than your mortgage. It is much bigger than any other expense. And so I always tell people is, what? The best advice is to start having a ongoing relationship with your tax accountant, because you want to be talking to someone on a regular basis if this is going to be the biggest expense you are going to pay all year. I mean,
right.
One rule of thumb to kind of look at is when you add up all the taxes, the average person ends up paying about, 40% of their income goes towards taxes on the federal, state, local level when you add up all those different things. I mean, if you think about it, if you made, 200,000, let's say if you made 150,000, take about 40% of that is going to go to covering taxes. The rest of it, will go to you and covering your expenses. But if you think about that, that is a really big amount of money. Most people don't notice it because it's paid gradually throughout the year. So I always say is taxes may be a pain, but you do want to take it serious because it's your biggest expense.
Yeah, no, I agree. I think that's a good way to wrap it up. It's important. You don't want the IRS to come after you. And on that note, tax tea.
Now, so when we think about the tax tea, now this is a situation that I said is, as I'm reading, I'm like, this seems like one of those episodes of World's Dumbest Criminals, because
Oh gosh.
we have a gentleman in the state of Tennessee that started a business, and he was a contractor, so did construction type work. But in this situation, he was the subcontractor. So there was someone won a contract with a big organization, and so they said, hey, we can't do this part of the work, so we're going to hire another contractor that can cover this piece. Now, this guy was paid about $1 million over, each year for about 4 years for his part of the overall contract. Now, when people hear $1 million, people think, oh my gosh, that's a lot of money. When you're running a construction business, that's really not a lot of money when you think about all of the other stuff that you got to cover, the labor, the equipment, all that stuff. $1 million is not a ton of money when you're thinking about construction, especially when the cost of things are rising. But this guy got paid this money. Now, the general contractor who hired them did what they were supposed to do. They filed their 1099s every year with the IRS saying, hey, we are saying that we paid, I'm just going to use a hypothetical name.
Bob.
We paid Bob's construction company $1 million to support our project. The IRS already knows that Bob has been paid. Well, what does Bob do? Bob just decides not to file that on his tax return. Bob files a
$1 million every year. $1 million. How did you think $1 million is going to fly under the radar? Forget about even the dollar amount. I think to your point, like anyone I think that's what I've seen. Like that's been what's been tripping people up is when the company that hires you files that 1099, the IRS automatically gets a record of those payments that are made. So now they're just kind of sitting there and seeing, all right, like, are you going to pay on this? Are you going to claim it? And when the numbers don't match and you're not reporting it, because I think he did that for 4 consecutive years where he did not report any of that. So he did file a tax return. He just did not include that.
He lied on the tax return. Is really what he did. I mean, he filed a tax return and he didn't include that in the tax return, to where it's just like, all right, when it's time to audit this tax return, because the IRS is sitting back saying, hey, you know what? John's construction company told us that they paid Bob's construction company $1 million. Now, we understand Bob didn't keep the whole $1 million. He had to cover different expenses. So we expect to see something show up on his return. But when Bob filed his return, Bob included $0 of that money on his tax return. And the IRS sees this like, okay, something is not adding up here. And so when they started looking and investigating, they realized that Bob has been completely leaving that off his tax return, which it is tax evasion. Like Bob was intentionally lying to the IRS saying, hey, here's how much money I made. Now, people may say, well, can't you consider that to be a mistake? The IRS didn't consider it to be a mistake. They considered it to be intentional, which made it tax evasion, which is why he got caught and why he's going to be sentenced to not only go to jail for some time, he's still going to have to pay it, because the IRS isn't just going to be like, okay, all right, we'll send you to jail for 3 years, but you get to keep the money. The IRS is going to come back and say, hey, we're going to recalculate your tax, your tax, liability. We're going to recalculate that. You're going to owe us that money. We're going to get that money from you. And in the meantime, you're going to go sit in jail and think about what you did. And it's just like
put you in the corner. Go, you are in timeout, sir.
It's just not worth it. So, I mean, that's why I would say that people just need to understand, like, hey, if you're being paid as a contractor, do understand the IRS already knows how much money you made, because that company that's paying you, they filed a 1099. So you're not getting away with something. They're eventually going to catch you, and you're going to have to pay your money, and you might end up having to go sit in jail for a little while. And then when you come out, you got to figure out how the heck you're going to pay that bill, because they're not going to let that go.
Yeah, no, I agree. And I think this is really where a good accountant comes in, because if he had an accountant, I don't know if he was Cookie, he was doing his own bookkeeping. Like, how do you just exclude $1 million? Now it could be that maybe he had some other contracts and it was just a miss, or you know what, maybe just give him the benefit of the doubt and say, you know what, maybe he wasn't paid on time. And so he felt like because he wasn't paid, even though he had done the work and earned the revenue, that he really shouldn't have been including that as his revenue.
I mean, me giving him the benefit of the doubt doesn't matter. The dude has been found guilty and will be sentenced. I mean, so it doesn't matter if I give him the benefit of the doubt.
Yeah,
The IRS,
no, he's going to jail.
The IRS has been like, hey, you've had your chance. We're dropping the hammer on this one.
Yeah, and I think this is where it's important to have a good accountant, right? And to at least have a professional look at your stuff, because someone could have easily said, hey, when I look at your actual receipts and your invoices, like the amount you're reporting as revenue on your financial statements actually doesn't tie with what you actually collected, because that would have been an immediate red flag when people were, when the accountant was doing that reconciliation. So I don't know if his tax accountant did his financials, or if he was doing them himself. Like, I don't know what the story is there, but either way, the IRS found out, and now homie is gonna have to go sit in the corner somewhere. So,
I mean, and that could be a very interesting thing. I mean, they didn't provide the details, but if he did have an accountant who was doing his tax return, that accountant possibly could be liable, because when an accountant does your tax return, the accountant also signs at the bottom that they are certifying that they are not aware of any major omissions, and that the information represented in this tax return is correct to the best of their ability. Well, if the IRS digs a little bit more and they say that, hey, this tax preparer did not do a due diligence to make sure that this information was materially correct, the tax accountant or whoever he had do the tax return, they possibly could get in trouble too.
That's true. All this to say, do the right thing. If there's a 1099, there's a paper trail, you best believe the IRS is going to be checking it out and tracing it, and they will know if you do not pay your taxes. So that's that for this week's Tax Tea. And thank you guys for tuning in for another episode here at Stuff Your Accountant Isn't Telling You. Until next time.
Hey, it's your girl, Tia Robertson. I'm the host of Entrepreneur Insider. Right here on RETV, every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there. is Demita Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week, because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demita Joe, and I'll see you guys on the next episode right here on What's Going On?